eyes on base. Tune in, press play. All is alpha on the way. Don't blink, just stay. Oh, yeah. Got my coffee and my tabs up. Charts on the screen trying to level up. Bass junkie breaking down that April for crypto. Now we're turning threads into seminar. What's a booth, what's a yield, what's a peg mean? They turn the jargon into real life scenes. From airdrop dreams to blue chip streams, they map it all out, now we all on the team. From what is gas, to check my stats. From I don't get it, to run that bag. All eyes on base, stay locked in. Learning Defi while the beats stay bumping. Oh yeah, from the first little back to a major move. Bass junkie, now we got something to prove. Get your notes right. Turn that late night scroll to a smart life guide. We just press play, let the questions fly. They explain that yield while the numbers climb high. Click connect, now I see the pool flow. Two-side deposit, watch the tokens grow. LP tokens in my wallet, feeling brand new. Fees dripping in while I'm chilling with the crew. Talking risk and permanent, what that do? They slow it down till the smoke shine through. From rug red flags to the gems in the rough, they keep it real clear so the fans stay up.
Yo! What's going on, guys? And welcome to this week's edition of Base DeFi Yield, episode 23. Our eyes on Base DeFi. Now, this is a weekly talk show where we talk to you about DeFi yields, some of the latest and greatest things happening in AI and the crypto space, and just talk about ways that you can earn money on these sideways days. By the way, guys, everything we discuss today is for entertainment and educational purposes only, not financial advice. Do your own research. But without any further ado, let's pass it over to my co-host of the most, Mr. Crypto Noah. How are you today, my friend?
Dude, I'm good, man. I'm back in San Francisco. I got back on Sunday. I was in Denver from the 11th till the 28th, so almost a month. And we did a show after ETH Denver. Yeah, because I worked
straight after ETH Denver. We had to cancel the one during because you were in the thick of it. We did the one the week after. But dude, I must say, I'm seeing something on your back wall. Is that a new setup?
Oh, so we just moved the office. So it's the same rug that's always in the background. I'm just a little closer to it so you can see a little better. I actually went to Palo Alto and like tufted it with the little tufting gun. So it's actually a carpet. So yeah.
Sorry, mate, you always give it to me about my British expressions. Mate, you're the tufting gun. What are you talking about? What's a tufting gun?
It basically means it's like a gun where you can like sew things. Basically, it's like, you know how you do the thread. It's like a gun that does it. It's a carpet rug. Like I used to have it on the floor, but I used to tell people like, don't put your feet on it. I felt like a dick doing that, so I'm like, I'm just gonna put it on the wall.
So it's a carpet, but not a standing on carpet. It's a Maya on the floor carpet, and then you got sick of telling people, hey, the floor is lava in this area.
Exactly.
It's on the wall.
I like that. The floor is lava. No, man, it's good being back. Right after we did our last episode, I ended up getting sick. It's like it happens every year at ETH Denver, even though there wasn't that many people. This year it just felt like a cold. I was out for like 3 days, but yeah, we did drop the ETH Denver song. Hopefully you guys got to check that out. And then we are releasing our Stand with Crypto song probably no later than next week, and it's our best song yet. It makes me want to.
Nice. So hang on. So last week you dropped the ETH Denver song. Then you teased us with a little bit of alpha. You told us it was your daddy's birthday, and you were going to release another song. So the song, because I haven't checked out the second song, but that was for Stand with Crypto.
Yeah, it's called Stand with Crypto. It's not out yet, but man, it's going to be a banger. It's going to be a banger.
Oh yeah. No
yeah.
doubt.
Yeah, that'll be dropping soon. But I have to tell you guys, this is what you guys come here for. I'm wearing my favorite piece of merch that I got from ETH Denver. It's a DeFi Saver shirt. Pretty plain on the front, but once you turn it around,
Oh man,
it says Peak DeFi ETH Denver. Pretty fire.
man, that's like the mullet of t-shirts.
Yeah,
Just
super.
like business in the front, party in the back.
Yeah, that's typical crypto, like just plain front, and then the back is everything. I'm like, man, I wish they would like
Ow.
reverse that a bit. But yeah, man, how you doing, man?
I'm doing well, man. I'm doing well. I mean, like all things considered, it's funny, like investing. So okay, so first of all, right now we are in a bear market. The fear and greed. I checked it this morning. It was at 14. Yesterday it was at 10. I mean, but then since then, there's been more speculation that the Clarity Act is going to happen soon, and like we see Bitcoin pumping past 70K and ETH at 2100. It's like, wait a second, what kind of bear market is this? Like what? Like where is the pity parties? Where is the max pain? And I'm thinking, like, am I just immune to this stuff now? Like this is my third cycle. Like, am I just like over just crying in the corner? But I look at my bags, I look at the coins I'm in, and it's in a bull market. It's easy to be right. Everybody's right. Every coin is pumping. But when it's the bear, you want to be in the right ones. And for the most part, it's a green day for your boy. So, so I'm feeling good. I'm good on that front. Feeling a little bit pepped over there. But then also just building open claw, the opportunities that there are. I mean, we'll dive into that more later, but just man, I'm in full build mode. I realize I'm posting a bit less on X because I'm shipping, I'm building, and not just in crypto. But man,
Yeah,
we'll circle back to that. But how are you? How are you, man? Like you're over the cold, feeling better. You got your sexy floor rug on the wall. What else is new with you?
man, it's there is an event tonight at Frontier Towers that Vitalik is going to be at. We're trying to see if we can get in. It's going to be like 10 security guards. They're being really
Dude,
strict.
just tell me you're friends with me.
You can actually talk to someone who knew you. You know Velvet Capital?
Yeah, dude. Yeah.
Yeah, we're gonna be partnering up with them on our sponsorship, and we talked to a guy named Michael there.
Michael. Have I spoken to him directly? Yeah, dude. I know Michael. Michael Haig.
Yes.
Dude, I know Michael.
Yeah.
We are way back. We've been friends for months.
That's what he said. I was like, yeah, me and Base. I was like, you guys know Base Junkie because their software works on Base, and they're like, yeah, we go way back. I was like, yeah, me and him do a show. We just did episode 22. He's like, oh, I'm gonna have to holler at him. So he'll probably be reaching out to you in a few days. But yeah, man, I got some good stuff prepared for this show. Since you mentioned the Clarity Act, because that's kind of what we're all waiting on, and I really don't think that the implications are really priced in on what that's going to look like once it does get passed. So let me just scroll here. So basically, the topic today that I want to talk about is Base becoming the compliance chain for Wall Street? And my theory is that Base, right now, retail is doing market making on all these chains. Eventually, institutions are going to be doing market making. But again, you have all these, it's not just one system like how TradFi is and with different places in that system. Here you have different universes, which these L1s and L2s are. L2s are like little semi-universes, I would say. So I think that like what if Base is not trying to be the most decentralized chain, because they're talking about launching a token in a DAO, but I think they're actually trying to be the most trusted chain, right? So Genius Act passes, banks can issue stablecoins. The Clarity Act passes. We have clearer rules on digital asset classification. Obviously, Coinbase runs Base, and they're the most regulated crypto company in America. So it's like, is Base quietly position itself as the blockchain Wall Street, the blockchain that Wall Street feels safe using, right? So first, like, what is a compliant chain? Well, a compliant chain would be regulatory friendly, have strong KYC integration. So it might be a little different bridging onto base. You might have to show an ID in the future, right? It could happen. They prioritize licensed stable coins, right? We talked to this project called HAI, where they're a platform where you can launch your own stable coins backed by anything. So that kind of stuff that kind of thing might not be able to exist on base. And by the way, it can also just be backed by vibes, which is hella funny. Compliant chains avoid regulatory gray areas and they attract institutions instead of anon degens, right? So it's just like, if we kind of compare it, Ethereum is like a neutral global settlement layer. Solana is like a performance plus consumer apps, and Base is trying to be regulated financial infrastructure, right? So why are they perfectly positioned for this? Well, a couple reasons. One, Coinbase's relationships. They're publicly traded, deep ties to regulators, they're already compliant. They have custody services, brokerage, institutional relationships, right? They custody the BlackRock ETFs. And then we saw that JP Morgan launched their stablecoin exclusively on Base, right? They have native USDC on there, direct integrations. They're already preferred by institutions. They have the on and off ramp advantage, right? So you have seamless Coinbase to Base bridging, and not just seamless, free, right? No third party friction, right? Solana's cool, but they don't have an exchange, right? And then they have sequencer control. So they're centralized enough to meet regulatory demands if needed, right? So it's just like, is centralization actually a fear here? It's actually a fear, maybe not just a bug, right? So if we talk about the Genius Act a little bit more, they allow regulated banks to issue stable coins, they require full backend, and they encourage transparency and compliance. But the question we need to ask now is that, where would banks deploy their stable coins on chain, right? We already saw what JP Morgan did, so no one's going to get fired for following them. They're not going to deploy first to a fully anonymous ecosystem. They're not going to deploy first to a highly decentralized chains with unclear governance, especially after the Clarity Act, or protocols with no compliant structure. They're going to be looking for a US-friendly chain backed by a public company with regulator credibility. That sounds like Base. So now if we talk about the Clarity Act, this is where it gets interesting. And just a quick refresher for the first timers on the show, welcome. Thanks for tuning in, by the way. The Clarity Act is basically going to define what is a security, what's a commodity, who regulates what, and which tokens fall under the SEC versus the CFTC, right? And how this impacts Base is that if token classifications are clarified, institutions can interact with DeFi protocols more confidently, tokenized securities may become legal, and on-chain RWAs becomes viable. So now imagine, and we're going to be wrapping up here pretty soon, banks issue stablecoins under Genius, tokenized assets become clearer under Clarity. They need a chain to settle on, right? So Base can become the default institutional L2, which is a powerful combination. So what does this mean for Base DeFi? Because this is All Eyes on Base DeFi. All Eyes on Base. That song's in my head. So if Base becomes the compliance chain, look at the liquidity implications. Stablecoin liquidity explodes. Institutional capital flows in. Yields become lower, but more sustainable, right? And when I say more sustainable, like you have this, a few years ago, the Wyckoff distribution was a big thing, to where like they talk about how in high prices institutions are offloading and low prices they're onloading, and they like to do a lot of small orders consistently so that they're not moving the price as much. So with these institutional small orders, that'll allow liquidity providers to make a more consistent income regardless of market conditions, right? Because institutions are always doing something, right? So if we look at the protocol implications, you have a KYC friendly versions of DeFi that will emerge, permission pools maybe, right? Which could suck, but could be good. Then you have segmented liquidity between retail and institutional users, right? And if we look at the cultural implications, because this is a big thing too, Base becomes less degen, it becomes more TradFi, more boring, but also more capital efficient. So it's like, I asked you, Base Junkie, would you rather have a 200% APR or trillions in institutional liquidity? It depends on the day, if you ask me, right? So it's like the tension, right? Crypto ethos versus institutional reality. And this is where engagement happens. Base was built on Ethereum. Ethereum was built on centralization, but Coinbase is centralized and regulated. So is this a betrayal of crypto values, or is this just how crypto actually scales and just kind of grows up? Right? Does this mean adoption requires compromise? My answer is yes. So the risk to this thesis, just to balance it out, is like, what could stop Base from becoming the compliant chain? Well, Solana court institutions, Ethereum L1 improvement, a true CBDC bypassing L2s entirely, regulatory hostility shifting again, because we saw Coinbase threaten to withdraw their support from the Clarity Act after they were trying to like ban stablecoin yields, and then institution building private chains instead. And just FYI, Stand With Crypto, the organization that we're making a song for, was incubated by Coinbase, and they're the reason why a lot of crypto bills are being passed and pro-crypto politicians are being funded and recognized, right? So just to wrap it up here, the long-term outlook, the Genius Act is going to be, it equals regulated stablecoin infrastructure, the Clarity Act token classification, Clarity, and then Coinbase is a regulatory gateway, and then Base is a scalable Ethereum layer 2. So that combination can make Base the Wall Street settlement layer for crypto, or it could make Base the stepping stone toward a future government-controlled digital dollar ecosystem. But I think either way, Base is strategically positioned in the center of this transition. And I think no matter what the outcome is, there's going to be a way where we can win. And there's also going to be a way where we'll have to accept the trade-off, maybe consider that a loss. But nothing's all good. Nothing's all bad.
It's never as good as it seems. It's never as bad as it seems.
Yep.
But I agree. I agree with that. Base could be the compliant chain because, in fact, just before doing this show, I was writing a long message about about Base. Just trying, just to some of the higher ups, just trying to.
Did you you write it down? You gonna put it in a pigeon and send it off?
Well, I've got my Raven in the corner. I'm like, okay, look, here's how we fix Base.
You burning the midnight oil over there? Got your lantern burning?
my quill is running out of ink, but I'm there, feather and plume, just just getting it done. But I think over the past few months, Base has had a bit of a public identity crisis, and just trying to be like hip with the kids, and like okay, where is mindshare? Let's try and jump on that bandwagon. But the truth is, Base, a lot of us joined Base not because we wanted to do what the majority is doing, which is at like this cycle, it's been a degen cycle. Solana has had so many transactions, largely due to pump fund, but and the whole meme coin cycle, the meme coin super cycle, that didn't actually happen, but just the degeneracy and the casino sort of opportunities that were really kind of like have now become synonymous with Solana. Based that's where the mind share is. Let's follow that. And just trying to identify as this or that. Base is the builders chain, Base is the creators chain, Base is the traders chain, basis for memes, basis for NFTs, basis okay, we didn't really come here for all of this experimentation and just trying to be chase the hot thing right now. No. Base is in a unique position where it doesn't need to chase. They can, because they have the backing of Coinbase, the number one crypto onboarding platform in the world. So rather than be following the metas, they have the opportunity to create the meta. And as you rightly said, is this selling out or is it growing up? You mentioned something like that. Well, Coinbase has 120 million users. Apparently, a lot of those are dormant. So I think I'm not sure if you mentioned that or if it was on another show of mine, that there's a large percentage that aren't active users but just holders of crypto who have got into crypto through Coinbase. Base has a unique position and opportunity to play in this onboarding. And if base positions itself in the role it was meant to take, as like the builder chain, the onboarding, like easiest way to get into crypto and easiest way to like get into DeFi and beyond. Like this is a slam dunk home run opportunity. And the fact that Brian Armstrong is leading the charge on crypto regulation, yes, I fully support that. Base be the compliance chain. Jump through those hurdles. Let the other chains follow in your wake. Yes, more competition, but let the cream rise to the top. But rather than follow, Base and Coinbase are well positioned to lead and build real businesses, not this degenerate casino that many people associate crypto with because of all the headlines that have come out in the last 2 years, but rather a real place where agents like AI can intersect with finance, and the way that AI intersects with finance is through crypto. Where better to build AI products than Base? Like I think that, and just now we are seeing that Base is like the premier place for AI businesses to start to form. So I think they are turning a corner and they are going down the right path finally after a few experimentations. I can't knock anybody for experimenting. I experiment myself. We try new things and like find product market fit, but finally the stars are aligning, things are making sense, and Base needs to double down and just push forward with this narrative and just signal to mainstream that crypto is safe and Base is the place to build real businesses.
Yeah. Now, man, it's did you see the movie The Other Guys?
Yeah.
It makes me think of that meme, that one scene when he was like, I know you think because I'm here everywhere, but shaved. And it's just like, oh, I know I'm seeming like I'm doing all this, but safe. It just made me think about that. But no, man, it's just like, just to comment on a few things you said. It's are they growing up or are they selling out? It's just like, man, sometimes you gotta put childish things away. You got to put the toys in the toy box and pull out the pen and paper and go to school and start to get a job. So it's just like evolution is a real thing. Like as a kid, you're not going to do something you do as a senior citizen, but it's not selling out. There is a way to sell out. Like if Coinbase just like, there's things that they can do to absolutely sell out, but it's just like, if they don't do these things, the space doesn't advance. And I think that, another thing you said that I think is also a funny meme in crypto. It's just like, it's like this thing in crypto where it's just like, you're never actually in a bull market. You're either in a bull market or the bull market's coming back. Right. And it's just like, that is, like you said, this bull market this market, see, I called it a bull market. This market is really weird because that could not be more true right now just because of the conditions. Like, we're on the verge of getting the Clarity Act passed sometime this year. I'd like to think probably before midterms. And we also have increasing liquidity. And that is the most important thing. Liquidity is the lifeblood of markets. So it's just like, if liquidity is increasing and money supply is increasing, and the central bank is actually, they're now increasing their balance sheet, which means they're buying bad debt from banks, giving liquidity to banks so they can loan out more money. But there is a lagging effect to this, right? And crypto is going to feel it the hardest because it's the smallest market and it's easiest to manipulate, and it's also the least regulated. So it's the most risky to institutions. But once it becomes regulated, it's going to become the most desired for institutions because it's very asymmetrical, meaning it's already down a lot. So it's a higher risk for number go up than number go down just because of how much it is corrected. But the fact that liquidity is increasing so much, it's just like, dude, the stock market is all-time highs. The Dow, the Nasdaq, um, the S&P 500. Gold is near all-time highs. We saw silver pumping, so it's just like everything else is already so high. So it's just like crypto is just like the only market that's corrected, really. You know what I mean? So it's just like liquidity needs to find a home, and eventually, we're gonna get there. But I would love to hear about, unless you had something to comment on any of that stuff, I would love to hear about where you're at with your open claw experience. Because I know we had a good chat with my buddy Marco last week. He actually just put out his Carnelian V1 today. He said he tweeted about it and put it on LinkedIn. I'm gonna see if I can like find a link to see if it's anything about it. But
So,
do you have
question on Carnelian, because okay, your buddy Marco, who came on the show last week and was gracious enough to, talk more about OpenClaw and AI after the call. He was launching Carnelian. What's the ticker, bro?
Well, no token yet. I'm gonna be helping him out with that, and definitely you'll be the first to know. But yeah, no token yet.
Just don't launch it like 3 a.m, like you Americans love to do. Like I remember, like even like the Trump token. I woke up and all my American friends like, oh yeah, I bought this token hours ago. I'm like 5x, 10x. I'm like, man, Europeans just exit liquidity to you guys.
Well, in his defense, he did launch World Liberty Financial Token at like 6 a.m. I remember our community at Know It Owls, scan that QR code, join our free community. We got up and had like a little buying event. We all showed up in our nightgowns and pajamas and just to buy it, and it dropped.
So it's always the way, man.
Except with Trump token, man, I wish I would have got that one, bro. That day I was fasting and I was like taking a break from technology. And the one day I did it, the fucking president launches a meme coin. Ain't that a female dog?
But, dude, talking of female dogs, the same thing happened. Not the exact same thing, but I can't remember if I said on this show, but like when Molt launched, so I joined the sailboats alpha group on base, and I think that's actually one of the reasons why most of my tokens are in the green versus the red, because there's a lot of like good traders over there. Altcoinist, anybody who's watching, not financial advice, but it's worth getting into. They called Tibber super early. They called O'Day and a few others that have really panned out nicely. Anyway, that day it was a friend's birthday, so I went out for tapas. Just like literally like 7 p.m. Go out for like a birthday meal, and then just I didn't check socials until the next day, and like I was scrolling back in the chat because one of my buddies, I'm not gonna say who, but he made like 6 figures of that, of like a 5K. He made like, it was like a 30x overnight, and from a 5K investment, it's like that's fantastic.
That's
good for him. And the thing is, I was so diligent on that chat, looking like just like keeping up to date with all the calls, doing a little bit of research on them, and then it's like I go out at 7 p.m, 8 p.m. There's the call. Molt is gonna like Molt. Here's what, and there was a whole thesis on why this should be a big thing, and then the next day it materialized. It 30x from that call, and I was just like, I enjoyed my calamari, but damn it.
We're gonna have our time in the sun with Tipper, man. I really think so. I really think so, bro. I
Yeah,
really think we can see. I think with everything that they're doing, potentially doing, obviously, I should say, I think that could be a top 25, maybe even top 10 token.
bro. I called it in. So I'm in the group chat. It's like no shilling, but what coins are you convicted in? I'm like Tibber. It's 190 mil market, or it's like 170 mil market
Yeah,
cap.
180
Uh,
last time I checked, something like that. Yeah.
Something like that. It's under 200 mil. And I was like, I think this is 20 to 100x. And then my friend, who's like the admin of the chat, he was like, all right, guys. So it seems if Base Drunk is going to call the next $20 billion token, like all bets are off. Like you guys can say what you want. But
Bro,
yeah,
the people that are behind it and the fact that he's like a big investor into like Robinhood and Coinbase, not only
and
can he get it listed,
Privy as well.
yeah, not only can he get it listed in the places where all the liquidity is, but like all the people from those companies, they're gonna want to be buying it. Like it's like the insider trading is different when like you have people at Coinbase, right? And a token launches or is about to launch. People at Coinbase know about it. But the fact that this is behind a VC where it's Coinbase and Robinhood and Brex and ID.me and all these different companies, it's like insider trading times 20, right?
Or times 100.
Times
And
100.
that's where this token can go.
Exactly, man.
Not financial advice.
NFA, DYOR, all that stuff. But I'm just saying, like, man, I'm really I'm really allocated. Tibber and ETH are my main positions, and I'm just gonna stick with it. The Tibber pool, the Tibber ETH pool is doing great. We can look at that as well if we want. Are you still in your Tibber pool?
So okay, so last week I said that I was in my Metalos vault.
Yeah, how's that going? Is it still a thorn in the old side?
Um, I pulled a little bit of off the table there.
Okay.
I pulled a bit out because I'm working on Fireside. I have and like this can sort of segue into like the open call conversation, but I got payroll to do. So I put some of the Fireside treasury into the Metalos auto yielding pool, and at the time it was like 200 something percent, and obviously like it goes up and down, and the market has been down since I put the money in there. But I was like, okay, look, I put enough capital that if we are on target to hit 200%, a twelfth of that covers salaries. I'm like, this could be a great opportunity to just, and if it's like clever AI is managing it, and if it's even if it's less than that, it will go a long way to paying salaries. But market's been down, so I pulled some of the funds from that, paid salaries, but I am interested in getting into maybe some more concentrated pools. Like the Tibber one is very interesting to me because of the volume, the consistency. It's been a long time under 20 cents. The 15 cents to 20 cents range has been pretty like that's kind of like bedrock. Or
Yes,
like
so much lower, and if it does, I will be buying a ton of it.
man, I remember one of these shows it got to like under 10 cents.
7 cents.
No.
It got to 7 cents, and I was like, "Damn, it's back where I originally recommended it." I bought some, but I wish I would have bought more because I would have been up like what 150% right now. Yeah, because it's at 19 cents, so almost 200%.
Man.
So that's what I'm like. Most of my
No shoulda woulda couldas in crypto. We all got those.
yeah, no, you're right. But no, it's I don't think it's gonna go much lower. If it does, I got my range set so that I can still capture volume and be able to buy in at those prices. Like my large Tibber ETH pool, it's crazy. Tibber's been outperforming ETH like the past year.
In fact, so people want to hear the you know let's rewind, because you and we could talk hours about crypto, about AI, about Tibber. Like we can go down the rabbit hole. And for those who want to venture down that rabbit hole, I recommend going on YouTube and Kyle Chassis, Chasse. He made a fantastic video on Tibber, like basically laying out all the breadcrumbs that have been documented from the people in the know, like Crypto Noah, the Noah Owls community, and altcoinist Constantine, people that have been long time advocates for the project, who saw the first few breadcrumbs. But Kyle Chassis made a really good video, and at this stage of the game, it's worth watching. It's about 40 minutes long, so dedicate a bit of time to it. Watch it at 1.5 speed if you need to.
Yep.
But yeah, really, really informational packed there. But people do want to know, how can we make money in these sideways markets, other than trading tokens? So, Crypto Noah, I know you have some great strategies. Last week we talked about, what's it called, like the something rows?
Oh, there's the center row.
Was it center row?
Yep, center row. How to rebalance.
Man, for some reason, in my head, I was picturing a rose. The center row.
That sounds a lot cooler, actually.
That center rose.
Maybe we should rename it to that. But no, the center row strategy allows you to rebalance so that, like, if price goes out of your range and you go to rebalance, you rebalance it in a way to where if it goes back into your previous price, you don't suffer any impermanent loss. And basically what you do is, if you're going to drop your range 16%, first you have to calculate your center row. So you do your top range plus your bottom range.
Is this something that's easier to explain with a graph, a chart?
Sure.
I mean, we're talking about Tibber. Like, let's put up Tibber, and also your pools. Like, your favorite pool is the ETH Tibber pool.
Oh yeah, for quite a while.
All right, let's pull that up. I'm currently not in any LP positions other than my MetaLoss one, but I do want to start doing this tranching strategy and just find a few different ones. I think I said on the previous one, but I completely exited my Zora pool. I was so happy to find like, it was like $3,000, like out of range Zora, because it just like kept bleeding out. And I was like, man, I'm jumping ship off that. I thought it was I thought it was one of the chosen ones, too big to fail. But on to bigger and better things.
Yeah. This has been a pretty high level of resistance here for a while. 20 cents, pretty much 19-20 cents. As you can see, ever since it dropped in November, it rejects it and come back down, reject it, come back down, reject it, come back down, reject it, come back down. Now we're back at it again, but we're at it in an actual uptrend, right? You can see this one's looks a little bit more sustainable. It looks like it's going to break out, but no retest, no entry. So I definitely want to see.
Don't give me hope. Don't give me hope.
Right. I've got enough of it. I want to see one of these, and I want to see a nice big green candle print and close here on like the weekly.
Dude, if you can just talk about this for a minute, I need to go to the other room for 30 seconds.
Oh, go ahead. So I'll talk about my tranching strategy here. So let me go to invert the pair, Tibber. All right, so I'm in 3 ranges at once here. So this is ETH Tibber. So whenever this is going down, that means that Tibber is outperforming ETH. If it's going up, since ETH is first, ETH is outperforming Tibber, right? So anytime I'm inside of these green boxes, I'm making money. Anytime I'm inside it, I know you can't see the bottom green line here. Anytime I'm inside of the green box here, you see these 2 green lines, I'm making money. And then anytime I'm inside these two purple boxes, I'm also making money. The wider your range, the lower your risk, but also the lower your income. The tighter your range, the higher your risk, but also the higher your passive income. So I'm in all of these different ranges just because, the market can only be doing three things. It can be trending upwards, it can be trending downwards, or it can be consolidating. And you never know what it's going to do. So I have this big range so that I can catch like these big volume plays right here, like these big volume candles, because you get paid off of volume when you're LPing. So when it had these big swings, like it went up here and it went way down here, I was able to catch all that volume when it went way down and way back up. Even this big red wick paid a lot. I'm able to catch those. But a lot of times it's just consolidating like this, like how it's been pretty much all month. So I like to catch those as well. And I'm in this tight purple range just because the volume's been so good. And this purple range is only, let's see here, 15%, right? So it's really, really tight. So I'm in three ranges at once so that if it's consolidating, I'm making money. If it moves, it goes out of my tight. My purple one is still in my green one. I'm still making cash like how I did here for a few days. And if it goes out of both of those, at least it's still in my yellow one. But the good thing about that one is I still get impermanent gain. I get more impermanent gain, but less yield because the smart contract isn't selling off my Tibber as fast as it is in these ones, right? So if I go all the way from here to here and my principal is 10K, well, my principal is going to rise a lot more than it would if I go from this price to this price. So there's pluses and minuses in all of them and multiple ways to take advantage. So that's why I'm just really exposed to Tibber because I just really believed in it. I'm going to refresh this so we know we're playing with relevant.
And also, man, I remember you used the analogy like the fishing nets.
Oh, yeah. I can touch on that again. So like,
sorry, did you just mention that now?
I didn't touch on it, but that's a good analogy. So it's just like, remember when you're providing liquidity, you're trying to, you make money off of volume, right? You make money off of prices going up and down too from impermanent gain. But the name of the game is liquidity. You're selling a service, right? As a trader, you want to buy low and sell high. But in order for a trader to be able to buy low and sell high, there needs to be a market maker providing liquidity. And that market maker's job is to buy high and sell low, right? And the reason why they're buying high is because they're buying it from the trader when they sell, but they're charging the trader a fee and vice versa on the downside. So it's just like, if you want to catch these big candles, these are like fish, right? Think of it as like fish. These are whale candles, right? And these are little schools of fish.
You're not sharing screen anymore, by the way.
Oh, good call. Let me do that again. Sometimes it just stops out of nowhere. I'm going to do entire. All right, going back here. These little candles are like schools of fish, and these big candles are like whales, right? In order to catch a whale, you need a big net, and the net is like your range, right? This candle was a whale. I was only able to, I can't catch this with this little net. It won't fit, right? I needed a big net. So in order to really maximize, you want to have some wide nets in the ocean as well as some small nets in the ocean, because you never know which fish is going to come by, right? If you catch a whale, whales, when you're whale hunting, they can feed your family for an entire season, right? And these big candles pay out way more. But if you're in a tight range and you catch these little schools of fish, they also pay out a lot more. They're just more risky. They're like little piranhas, right? So being in a tranching strategy helps you to optimize for all kinds of market conditions. You just have to make sure it's a pair that's good, that's not going to go to zero. And I don't care about impermanent loss in this situation, because whether if I'm holding ETH or Tibber, it don't make me no never mind, because I'm really bullish on both, and they are the largest allocations in my overall portfolio anyway. So if I go here, right now that wide range is paying out 132%. I have $820 in uncollected fees. So I've been in this pool literally for 155 days, which is a long time, not having to do nothing but come and claim rewards, right? And in that time, the rewards that I've claimed in today's price, with Tibber and ETH being down, 50-40%, is $5,000. But we'll also have to take into account when I'm claiming those rewards, I'm using them to buy other things, stack cash. So it's not going to get you your true net because that depends on what you do with your rewards, but it's just the rewards factored into what the current prices are today. That's still good for not having to do jack shit and just hit a button, right? This pool is paying out 277% right now as we speak, but again, these can go up and down at any time. I've been in this one for 8.8 days, so a little over a week. So in 1 week with 5K, looks like I'm up a little bit on principal. I've been able to make $300 in a week, which is good. In my really, really tight range, I originally hopped in with 2K, so I'm up around $95 on principal. And I've been in this one for just 1 week. So in 1 week with $2,000, right, I made 95 plus 138. So almost $300 in 1 week from not doing nothing. I haven't claimed any rewards yet. So yeah, these sideways markets offer really great opportunities. And if we come over to the old yield hunter tool, you can see some of the yields. This PNDC pork pair is insane right now. Look at that.
Well, hang on, like when you see, dude, like when you see someone like that, though, that's what 1,000,000% APR.
Let me
Like
count. Hold on.
that
1,
has to be a mistake,
2,
surely.
3, 4, 5, 6, 7. 13 million% APR, bro. That's insane. And if we look at the liquidity, no,
Dude,
it's I've never seen the volume to TVL score that high.
that's got to be a glitch, man.
I've never seen the volume to TVL ratio higher than the yields in other pools, man. No, look, the liquidity is only 12.8K, but the volume is 482
Dude,
billion.
no.
Hold on, let's look this up. Let's verify this. PNDC, and it's a 1% fee tier. And then
Well, what
we're
even is pork? PNDC.
swine. That's that swine.
Mate, I remember this guy. This, what's he called?
PNDC. Hold on, let me make sure.
Pawn token, pork. It's like an influencer token. Like
PNDC and then pork. Let's see.
I think he did the punks, the fake, the funks. I'll find him on my phone real quick. I remember this guy. He was I think he turned out to be a bit of a grifter, to be honest. But he has a community behind him, so funks.
Oh, let me see which fee tier that was. So 1% fee tier on Uniswap.
Dude, that's gonna be wrong, I swear.
Yeah, probably.
Dude, 13 million% APR. I'll get in that for an hour and cash out a 2x.
Yeah. Yeah. Yeah, I wouldn't touch it, but it just gives you an idea. As like, yeah, it's never a bull market, it's never a bear market in liquidity providing.
Let's
So-
let's talk about some of the other ones that aren't that one, because that one would look like quite the
Here's your-
anomaly, super high risk.
Here's your anti-hunter.
You're not sharing, by the way.
Oh shoot! I don't know why that keeps happening.
Anti-hunter.
Yeah, it's panning out pretty good.
Man, I was bullish on that a week ago, but
It's down bad, but
down bad.
Pool is not. See that? 1,000%.
Okay.
Claude. Here, let's look at base. This is the base show. Oh, Velvet. Is this your guys? Oh, hold on.
APR 0.55. You must.
Yeah, there we go. I'm like, hold on. What's going on here? Okay, here we go. Scout, Poly Market, Anti-Hunter.
I mean, but like, okay, so the
Toshi.
interesting thing about the APRs, like you make money on the ups and the downs. I feel like Anti-Hunter's been like a lot of hard selling. You know, like they sort of like they pivoted their stance. I mean, we're at what 500K market cap now.
Yeah, Banker right here, 159.
Where's Banker? 159%.
It's like
And
these seem shitty, 150%, but that's still really good.
I mean, to be honest, a banker though, that's something I'd be happy to hold up or down. Yeah, it's Tibber, 129%. Okay, I mean, to be
Avant,
honest, like
Avant.
long holds right now, because I mean, right now, like markets are pumping. Do you feel that that was the bottom, like
Yeah,
that we already had hit the bottom, and we're like now sort of airing on up,
yeah. I'm gonna show you.
or do you think that there's another you know crash in the prices to
I'm gonna,
come?
I'm gonna show you. So even like on ETH USDC, you got 100% yields on 1, 2, 3, 4, 5, 6 different pools. So I mean, that's fucking great, guys. That's really great. In regards to, do I think the bottom is in? So let me see here. You guys follow Know It Owls on Instagram. I actually put out a post. Let me actually go and pull it up real quick because it kind of talks to this directly. Um, so this is like the structural answer. If we go to, this is the Bitcoin dominance chart. It's in a long-term bearish structure, right? Which is lower highs and lower lows. And if we look at any other altcoin season, this was going back to 2017, right? Hold on, wrong chart, guys. I'm supposed to be pulling up Bitcoin dominance, not the Bitcoin chart. Bitcoin dominance. Here we go. Okay, so let me delete this. Boom, and delete this. Boom. All right. So now, if we go back to the 2017 altcoin season, Bitcoin dominance always drops because when this drops, that means altcoins dominance increases, meaning people cycle money from Bitcoin to altcoins. So in order for us to have this crazy altcoin season that we want, we always see this every time, right? 2017, right? 2021, right? And we haven't gotten that yet. We got this little bitty drop right here, but we recovered. Whereas these ones, they drop way down and then recover way after, way down. We actually never recovered from this one yet, or this one, right? So if we look at this right here, remember, it's the same thing. Like you want to see a break and a retest. So right here, we saw it testing as resistance. And this is our 62 EMA, which is like rolling Fibonacci. And you can see that when it does drop, the 62 is on top of our 200-day moving average, which is our blue line. So every time we see this orange line on top of the blue when we get our altcoin season, right? And when the blue is on top, that means Bitcoin's still in the show. All right. So we got test, boom. We had it break, retest, boom. So now here we are here after we got the Bitcoin ETF. We had a break. We have retest. So we're getting the multiple retests like we did in the last cycles. We just haven't gotten this yet, the big drop, which is what we're waiting for. So it's just like, and look, our 62 is crossing and it's on top. You see, we got that cross right there. Can you see that?
Yeah.
So we finally got our cross, which is a great signal. Waiting on the Clarity Act. We got global liquidity increasing, like we said. So it's just like when dominance falls, that signals that capital rotates. So the first level to watch is 54%. Where's that at?
So you just finished sharing screen. Was that on purpose?
No, I didn't. It just does that for some reason. I have no idea why. Thanks for telling me though, please, because I don't be knowing sometimes. So yeah, we want to see like this kind of drop again, but we want to see this drop precipitously. And right now we're on the weekly chart. If we look at these on monthly charts, you can see it a lot clearer. So on the monthly chart, we haven't even gotten below our 62 yet, like how we did here. And I guess the 62 didn't even work way back then. So we still have some ways to go, right? But like I said, the market is like a giant ship. When you turn the wheel of a ship, it doesn't turn immediately, but if you swim down to the bottom of the boat, you see the rudder move immediately. And the rudder is similar to the trend change on these small time frames, right? So if we're on the daily chart, we already see the trend shifting because we got a cross here. We just haven't, we got one on the daily and we got one on the weekly. It's just not showing on the monthly yet, right? So yeah, I mean, it's just a matter of when, not if. We haven't gotten it yet because Bitcoin dominance hasn't dropped. And it's going to be tougher this time for it to drop because we have Bitcoin ETFs. We also have Ethereum ETFs. We're going to have a Solana ETF soon as well. And other ones, probably XRP ETF, Chainlink ETF, right? And eventually we're going to have crypto indexes that can be bought on the stock market as well, just like the S&P 500. And you can buy a basket of the top stocks. You're going to be able to buy a basket of the top cryptos. They're going to be included in people's 401ks because most people aren't going to want to, handpick the top cryptos because, it's hard to do. So it's just going to take some time. And the cool thing is, while we're waiting on that to happen, we can be getting triple digit yields before the institutions step in, right? We can be getting 132%, sometimes 1,000%, sometimes 700%. So there's always opportunities in the market. You just got to know where to look to see them.
Yeah, man. Well said. And to be honest, I think I need to get into, I mean, I want to get into a typical, because right now my auto compounding pool is paying less than 100%, and the fact that your wide tranche is paying 130, like,
That thing's 270 something percent wide.
and yeah, and you've had that for half a year.
Yeah.
Like, man, if we are moving sideways, that feels like a comfortable set and forget kind of thing, and that was really what I was hoping for, because I know you are more diligent and like checking it like regularly. It's like, okay, rebalancing, and that's something that I super appreciate you for sort of like teaching me, and you sort of like bringing that at me. But also I just want to set and forget. I just want to have some
You got a
capital. I don't
company
need
to
to
run.
babysit.
Yeah, you got a company to run, man. You focusing on bigger and better things. So yeah, no, that makes sense.
I mean, that's it. And I think for like advice for people watching, it's like, okay, people that maybe don't want to be looking at it daily, maybe just want to check once a week and just be surprised that, oh yeah, I've made another $100 this week from my 2K investment. I mean, $100, you don't, you're not throwing a parade, but from 2K for doing nothing other than just being at the right place, and
1 week.
maybe doing nothing is the wrong way to say it, but like
Oh, it's not. I haven't done shit.
passively, but you've done the research, and that's the information that we are trying to share with the viewers, people watching this. There are ways to make your money. You don't need to have 100,000 to make a meaningful contribution. $100 a week, hey, that pays for some
Wi-Fi,
groceries.
groceries, some Wi-Fi, a date night.
Day night, free day night on crypto.
Yeah, and is that and the thing is, it was actually almost $300, $95 on principal because Tipper went up a little bit, and then $138 from the fees.
Says what, $235.
Yeah, almost $300, $250. Yeah,
Not
so
too shabby, eh?
that's not too bad, and that's just my very very tight range, and it's went out of range a little bit too.
You
So
know, one other bit of advice that you uh, helped me with was to borrow against ETH, because I had a bit of ETH, not a lot, but like I think I put like 1.5 ETH on Aave, and I borrowed against that, bought some Tibber at like 13 cents.
Attaboy, now you're up.
Now we're up now, and so I just added that. That's a beholding to my, you know, tip and nest, little nest egg, a little nest quail egg. You know,
Hey, pretty soon that quail's gonna turn into an eagle, and we're gonna be flying.
man, we get full ostrich mode here.
Ostriches don't fly though.
No, but dude, have you not seen an ostrich egg, bruh? We're talking this. Yeah,
They
okay.
are huge though. They are huge eggs though.
I went down the egg metaphors, and you were going on the birds flying metaphors, and we got like a an ostrich
We
falling
kind of
from
met in the middle a little bit.
yeah. All right, man. Well, look, let's put a nice bow on this. We just hit the 1 hour mark, so it's a good time for it. I mean, like AI. Look, all I'll say on it right now, because yeah, right now I'm focusing quite a bit on AI, as I do recommend anybody who's watching to like at least educate yourself a bit, try it, dabble.
Watch
Just
our last episode for sure if you haven't before you use Claudebot.
for sure, for sure, for sure. But yeah, honestly, the fact that we are in crypto, this is our unfair advantage. We are at the bleeding edge, tip of the spear in terms of the intersection where tech meets finance. And as we are all as civilization is at the cusp of like, AI is replacing people. It's like the vast majority of people are still just using ChatGPT, just for like, asking simple questions. But the fact that we're trying to monetize it and it's possible through crypto, it's like, okay, we're actually looking beyond that to like, Anthropic, Claude bots, OpenClaw, and how and like with Banker, with these skills, all these other like skills libraries, how to like monetize it and how to like actually like capitalize on it. This is our unfair advantage because we have a head start on the normies because we're looking to monetize from the latest tech, and AI is the latest tech and it advances every single week. So, you know, look into it. Look into it right now. The way I see liquidity on crypto, it's fragmented. It's not flowing in an abundance. I have some positions, some long term holds. I believe in Tibber. I believe in Banker, ETH, Ode, Fire. That's Fire's my token, so of course I believe in that. I believe in what I'm capable of, but beyond that, it's a bit more rotational, a bit more trading sort of focus, but it's a harder market to trade in when it's a bear market. You need to, do more research. And even when you find great projects, there's no guarantee they're going to pump because there's limited liquidity in crypto. So if you are looking at AI transcends crypto in many ways. So, research it, find opportunities in your local markets, things that you can help with, things that can be automated with AI, and just find ways to monetize this because we have a head start on the vast majority just by being in crypto and looking at this stuff. So, I hope you guys can make money in the sideways market, down market, and I believe it's a good time to buy crypto. If you're holding crypto, it's not so fun. But if you're earning outside of crypto, it's a good time to be getting in.
Absolutely. Yeah. Nothing to say to that, man. Well said.
All right, man. Well, any parting words to leave us off with?
I would, per usual, join our free community. We do a DeFi challenge every Monday with our coaches and myself, where we provide all the tracking, more than what we show here on the show, and we handpick liquidity pools for people to get in. And we are, if there are also people watching who They're maybe not quite ready for DeFi yet. We do a 8-week cohort that we're going to start doing this month. We haven't picked the dates yet, but it's just going to be basically, general education. So setting up wallets, decentralized exchanges, consensus mechanisms, layer ones, layer twos, NFTs, DeFi, RWA, and now we're going to have sponsors in this episode, where we're going to be showing them their products. You get mission, you get homework, so to be able to help you get a job in Web3. You'll get your certificate, as well as help you to be an entrepreneur in Web3, because you need all this knowledge in your brain to be able to, come up with these ideas and, maybe make the next killer app. So if any of that sounds interesting to you guys, scan the QR code up there, and we love to meet you on the inside.
Sounds great. Well, yeah, always dropping the alpha, always dropping the heat. Crypto Noah. Guys, we do these shows every Wednesday night, 9 p.m. UTC, to learn about more DeFi pools and how you can make money. If you have any questions, always drop them into the comments. And, Noah, I must say, thank you for doing all this research every week in, week out. You're always dropping knowledge. We talk DeFi, we talk fashion, and
I got a lot more, guys. You guys haven't even seen half of it. You guys probably only seen like 15% of my stuff, and that's the crazy thing. Especially after ETH Denver, I got like 30 more shirts now.
Oh well, I think once you run out of shirts, we're gonna call it with the show. Like, okay, that's it. No point intruding anymore. We've seen all of Noah's shirts.
Yeah, we're going to ETC. We're probably going to go to ETH New York. We're going to ETH Argentina. So yeah, man, this show ain't gonna never end if that's the case.
The show must go on. Yeah. All right, guys. Look, we'll see you next Wednesday for another episode of Our Eyes on Base DeFi, or Base DeFi Yield Show. Until next time, stay safe, stay healthy, but most importantly, stay based. Peace out, everyone.
I'm a baseline junkie. I'm a baseline junkie. Tell him again. I'm a baseline junkie. Tell him again.